Hey, what's going on YouTube? Welcome back. It's Travis here with JT Wealth. In today's video, we're going to talk about 5 stocks you can use to double your money. So let's get into it. Alright guys, welcome back. Thank you so much for joining us in today's video. If you don't mind, take 2 seconds, smash that like button and consider subscribing to the channel if you haven't already. And like I said in the intro, in today's video, we're going to talk about 5 stocks that you can put into your portfolio to help you double your money. And not just double your money, but do it faster than you otherwise would have thought. We're going to talk about which 5 stocks I'm talking about, as well as the rule of 72 that is normally utilized to determine how fast any one person would be able to double their money. And of course, normally anytime you're looking to double your money or just, do something significant or drastic with it, there's a lot of risk that comes with that. And anytime you're doing anything in the market, there's risk, but we're not looking at stocks that are considered very risky today. As a matter of fact, they're all dividend paying stocks, which normally means they are blue chip stocks that don't carry as much risk as, say, a tech stock or a biomed stock might carry. And since this is a dividend-focused video, I do want to remind anybody out there that's looking to create a new dividend portfolio, check out the links in the description section down below to M1 Finance, which is the one that Julie and I both use for our dividend portfolio videos that you'll see here on the channel. If you haven't seen those yet, do check them out. They will really help you out in setting up that portfolio. But you're going to get free money just for using the link, and when you do it, it helps out the channel, so we always appreciate that, guys. Okay, jumping right into which 5 stocks we're going to talk about today. This article came out at the end of last month from the Motley, and it's 5 high-yield dividend stocks that can double your money by 2029. And these are all income stocks with yields ranging from 4.4 to 10.3%. And now I know what you're saying, double my money in 2029, that's so far away. Well, that's only really less than 8 years from now. And when we get into it, the rule of 72, you'll see this later, really does say that is really fast compared to an average. All right, so if you're able to do this in less than 8 years, you are doing really well. And if you're not a normal watcher for our dividend series, you don't necessarily understand why we love dividend investing, but let me give you some quick statistics to showcase why dividend investing is so important to your portfolio. Between 1972 and 2012, the S&P 500 dividend payout stocks earned on average about 9.5% annually, and that's combined with their growth and their dividends. Whereas the stocks that did not pay out a dividend were only achieving 1.6% growth annually for the same time frame. So that is obviously a significant difference, and I want to be on that higher end. But I said I'd cover it, so let's touch on it real quick. What's the rule of 72 and what does it mean? Well, this is basically a simple way that people use to determine how long an investment will take to double given a fixed annual rate of interest. And you divide 72 by that annual rate of return, and it'll give you a rough estimate of how many years it'll take for that initial investment to duplicate. Here you can see a bunch of examples where if you have $100 or $1, whatever the case might be, and the rate of return is 2%, with the rule of 72, it's going to take you 36 years to duplicate your money. If you had, say, a 5% rate of return, it's going to take you 14.4 years to duplicate your money. And if you're looking at 8 years, which is kind of the rough estimate that we're utilizing today to double your money by 2029, you would need to be making an annual rate of return of 9% just to double your money in that same time frame. Okay, and with all that aside, let's look at which 5 stocks we're talking about. All right, and the first is Annaly Capital Management, ticker symbol NLY. And this is great for income seekers who prefer the dividend to do most of the heavy lifting. It's a mortgage real estate investment trust, or REIT, and is good bet to double your money by or before 2029 by reinvesting your payouts at that 10.3% yield that NLY is offering. Now, if NLY could maintain that 10.3% dividend yield, you could use just the dividend yield alone, no growth at all, and double your money in a 7-year time frame, so even faster than that 2029 timeline we're looking at. And if you're worried about its history or how long it can maintain a roughly 10% dividend yield, check this out. Over the past 2 decades, Annaly has averaged around 10% dividend yield, and it's paid out over $20 billion in dividends since its inception nearly a quarter century ago. Okay, on to the second company we're looking at today, and that's ABBV. So here we're looking at a pharmaceutical stock, and ABBV, ticker symbol ABBV, has a 4.4% dividend yield, and that's got some modest growth potential built into it as well, and it's insane value proposition. They really do have all the tools you need to double your investment by 2029, if not sooner. With their anti-inflammatory drug Humira pacing set for $20 billion in annual sales for 2021, this is definitely a company we're looking at for some considerable growth. To put those numbers into perspective, Humira is the #1 top-selling drug in the world. Humira drug and other drugs, they've definitely looked towards acquisitions recently to diversify their revenue stream, including purchasing a company called Allergan recently, which was immediately accretive to their earnings. And that deal provided added cash flow for research and development, giving them one blockbuster presence with Botox, and that has cosmetic and therapeutic applications. Next up on our list is Altria Group. And Altria Group, ticker symbol MO, has a 7.1% yield. And yes, it's a tobacco stock company, so there's not a whole lot that you're going to get excited about that, especially in the days of healthcare and better education for people. Not everybody's lighting up a cigarette anymore, and that's fair. But they have a fantastic and consistent delivery for investors through the long run by branching out into other areas such as the heated tobacco systems and jumping onto the Canadian and eventually, I'm sure, the US marijuana stock market. And with a history of strong dividends and a 7.1% yield, you really wouldn't need significantly more growth to reach your doubling your money by 2029. Next up on our list is IBM. And IBM has a dividend yield of 4.7%, and obviously their ticker is just IBM. And now let's just get this out of the way. No, IBM has not been doing well for the last 10 years. As a matter of fact, it's been doing terrible for the last 10 years. However, looking at their most recent quarter that just came to a close, they reported $7 billion in cloud revenue, which was a 13% increase from the prior year period. And more importantly, their cloud sales made up 37% of their total revenue. Their margins are considerably higher than before, and the key to growing the company's operating cash flow. Now, as a reminder, they love to use their cash flow to pay that 4.7% dividend, buy back their stocks, and make bolt-on acquisitions mostly in the cloud space. Okay, so the fifth and final company we're talking about today is Enterprise Products Partners. And they have a ticker symbol EPD for Enterprise Products Partners, and they have a fantastic yield of 8.3%, and it has superior payout history and share price appreciation. And it might be fair to say looking at an oil stock company right now isn't necessarily in your best interest, but if you look at the history and what took place in the last year or two with oil stocks, it almost didn't even touch Enterprise Products Partners. They were hardly phased because they're a midstream operator and they have over 50,000 miles of pipeline and 14 billion cubic feet of natural gas storage space, in addition to more than a dozen processing facilities. Also, EPD has raised its base annual payout for its dividend for the last 22 consecutive years, and its distribution coverage ratio didn't drop below 1.6 during the pandemic, because anything below 1 would signify an unsustainable payout, right? So they have incredible cash flow clarity and their willingness to spend on new infrastructure, plus you can almost bet that dividend will continue. But these are definitely companies you can invest in, utilize that DRIP or the dividend reinvestment plan to benefit from both the growth and the dividend payouts of these companies over the long term. And you certainly would be able to double your money in the next 8 to 9 years, assuming all goes as well and we don't have anything crazy happen in the market. But as always, I am not a financial advisor. This is not financial advice. It's just provided for information and entertainment purposes only. Anyways, guys, hopefully you found some value in today's video. If you do, give me a big thumbs up, consider subscribing to the channel, leave me a comment in the comment section down below. Let me know what you think of dividend stocks as a whole, or these 5 companies we talked about today, and what your strategy is going forward to double your money. I know in the last 2 years, doubling your money may have been a lot easier than otherwise, especially if you bought at the dip. But nonetheless, guys, thanks for checking out the video, and until next time, bottoms up.